In this week's analysis, we'll take a look at gold, silver, and CHF-JPY. So CHF-JPY is going to be one of the most important charts in this video. So starting with the gold chart on the 1 hour time frame, what you can see is strong bullish momentum to the upside, massive breakout from this area of resistance, so double top. I shared this via a post on YouTube a few days ago and also on our Discord. Right now, it's best to stay away from gold, right? So I'm going to explain why. We're currently in no man's land, and you do not want to jump into a buy position just at this current price level because you believe price is likely going to go higher, right? So if you jump here, there's a good chance price goes all the way down to this area of value, creates a base, then lifts up, right? So you don't want to miss the opportunity to go long here by FOMO into a position at these highs. So another reason why I feel we may get a reversal, a pullback, is because the RSI seems to be showing us some sign of weakness, right? So even with this consolidation here, you should expect the RSI to be around the overbought level. But right now, we seem to be consolidating around the mid-range zone. So this means two things, right? We're likely going to get an explosive move to the upside, making the RSI rise higher, or we're likely going to get a small pullback. So give me a minute. So we're likely going to get a small pullback from the current price level, maybe a small pop to the upside and pull back to the downside, right? Creating a base around this price level and lifting up higher. So this price level may coincide with the moving averages. So remember, I track the trends with the moving averages. So 200 EMA, 200 SMA on a 1 hour time frame right now, they seem to be creeping higher, at least, right? So if we get a pullback from gold into this area of value, touching the moving averages on the 1 hour time frame, then this will be your confirmation to go long. So when we bounce off of the moving averages, you can go long after a confirmation. It could be a bullish engulfing candle, it could be a spiny top, it could be a doji. So whatever confirmation, it could be a formation of an higher low, right? So bullish market structure. Then you could go long. Stop loss should be placed underneath the bounce of the moving averages, and first take profit target could be as high as the first high, and you ride the rest of the positions as you go higher. So personally, this is a conservative approach, and this is what I'll be watching out for this week on gold, because getting a position here would just be a game changer, will be life changing, right? So for those trade with heavy lot sizes. So this is what I'm watching out for on gold this week. I wouldn't be rushing into any position right now or jumping into any trade because I believe we're likely going to go higher. So I do think we're going to go higher. We're going to take a look at silver charts in a bit, but I wouldn't be jumping into a trade right now because there's a good chance you get wiped out, right? There's a good chance you get wiped out. Then the main move starts to happen, right? So it's best to stay patient, wait for those pullbacks, then look for opportunities to go long. So for a more aggressive approach, you could go to the 30 minutes time frame, and you can see that on the 30 minutes time frame, the moving averages are getting closer to the current price level, right? So the reason why the 30 minutes time frame is still valid is because we have held these moving averages on the 30 minutes time frame as support over here. So one support here, another one here, another one here. So price failed to break through before we had this massive lift up to the upside, right? So there's a good chance we come back down. So while you are waiting for the moving averages, the price to retest the moving average on the 1 hour time frame, it could easily just come into the moving average on the 30 minutes time frame and then go higher without even giving you an opportunity to go long here. So another reason why this is valid is because you can see the pattern already, right? So we've created a low, a higher low. So there's a good chance the next time we come down to the moving average will be another higher low. So bullish market structure, higher lows, and that could just send price going higher instead of coming into this area of support that will give us a very good opportunity to go long. So this is going to be a deep value zone. So we may get front run. That's why an aggressive approach will be using the 30 minutes time frame to pick your positions, right? But the thing is, it's all about probabilities. So if you're choosing to go long on the 30 minutes time frame, remember, risk management is vital. For me, I probably would do this, right? So I'm probably going to do this, but only after I get a confirmation that we are indeed going to go higher. Your confirmation can also be wrong, right? So it's all about probabilities, good risk management, and see you end up, making money or losing money, right? But at the end of the day, when you get it right, your risk to reward ratio is extremely high, right? It's extremely crazy. So for example, you go long here after a bounce and your confirmation, stop loss is probably going to be around 200 pips, as the case may be, but your take profit target could be as high as 2,000 pips, which is exactly what I watch out for. So if you've been following me on Discord or my YouTube, I aim for massive swings on gold like this, right? So a risk ratio of 1 to 10 or 1 to 5 seems decent in my opinion. And even if I take a long position here after a confirmation to go long and I am wrong, I'm just simply going to wait for the 1 hour time frame to see how price reacts with that level on the 1 hour time frame. And if it gets a bounce and another confirmation, I'm going to go long again, probably heavier. And if I'm wrong, then I wait, reassess, and reevaluate. That's how it is. So it's a game of probabilities, but you have to position yourself in a way that you'll be on the better side of the market, right? So this is a bullish trend. Price is likely going to go higher, but at what price levels do you want to get in on those trades? So if you wait too long for the 1 hour time frame, for example, price may never get here and you miss the opportunity. But if you go too early on the 30 minutes time frame, price may break through and go to the 1 hour time frame. So it's all about probability. It's all about confirmations. Even confirmations gets debunked, right? Your confirmations could get overridden and you just find out you're in loss. So it's part of the game. You accept the loss, you move on, wait for the next opportunity, and you go in. So that's how I trade. That's how I will be approaching gold right now, because entering here on the 30 minutes time frame pullback is better than entering at the current price level, because you believe price is likely going to go higher. So for a more extremely conservative approach, right? So if you want to really minimize your risk, so what I just explained is an aggressive approach towards the market, right? Trading gold. But for a more conservative approach, you could wait for a consolidation, so a move to the downside, probably close to or into this moving average, then wait for a move to the upside, a consolidation like this, right? And a breakout as a confirmation that we're going higher. So this is a more conservative approach, and you're likely going to win this trade 10 out of 10, right? But would you be patient enough? So by that time, moving average might have crept up all the way to these price levels, right? So if you want to be conservative, you don't want to take risks, this is something that could equally happen. And if this happens, I think this trade is just, I can guarantee 90%, right? 90% that if this happens, you get a breakout at this price level, this is just going to go high, right? It's going to go up. No, it's a no-brainer, right? So this is a conservative approach to trading gold. And if you are very patient, you have a very low capital, you are, you don't want to risk too much or overexpose yourself to the market, then this is what you should be watching out for, right? To go long on this kind of setup. But this may never happen, and if this doesn't happen, then you should be fine missing the trade opportunity. But if you want to expose yourself to the market a little, use very tight risk management, so at least we have a validation here that this moving average right now are acting as good level of support. So bounce, so there's a good chance we come down here and bounce, right? So if that happens, you could go long, small risk, tight SL, good risk to reward ratio, and if it fails, then we move to the 1 hour time frame, right? So move to the 1 hour time frame, aiming for this area of value over here, and if it bounce, then good. But if that doesn't work, then you wait for the more conservative approach, which would be waiting for a consolidation like this, followed by a bullish move to the upside. And this one should absolutely tear up higher, right? If you get a pattern like this. So this is a conservative approach, aggressive approach. So whichever suits your trading style and your risk management profile, you trade as it pleases you, right? So this is my outlook on gold. Moving on, I'm talking about CHF. So CHF has been crazy, like crazy. So this is a chart I also shared on my Discord, I think, right over here. I shared this chart on my Discord. Aged well, did really well, but you know what I did? Something really crazy is I went out, I got out of this trade just too early, right? I entered here after I break out this bullish flag. So this is a bullish flag. Mind you, if you haven't gotten our chart pattern playbook yet, get our book. It's going to help you a lot. So bullish trend, bullish flag. I entered here after the breakout and I closed my fucking positions around here, So I closed my positions here, right? So 200 pips, and I just missed out on this massive move to the upside. Like, this could have easily made me a ton of money, right? But I got out very early. It's fine, it happens in trading. So right now I'm looking for another opportunity to either go short or go long, because I don't think this is going to go up forever, right? So going to the 4 hours time frame just to show you a quick view when you zoom out. So right, you can see this parabolic movement, right? This is a sign that price is probably going to a blow off top. So a blow off top is when a trend, right, actually ends. So I think CHF is likely getting closer to its end because of this move. I don't think this is sustainable long term, right? So you don't expect it to keep going higher forever. So that at least at some point we may get some consolidation, right? Then a move to the upside. That would probably be the final move for silver. Then a massive move to the downside. So this is just my outlook. I may be wrong, but I don't think this move is sustainable long term, and I don't think it's gonna go higher forever. So back to the 1 hour time frame, just to show you what I'm watching out for. So for now, I'm still bullish, right? And I'll be looking for opportunities to go long, but on the 30 minutes time frame, right? So on the 30 minutes time frame, you can see after we broke out from this consolidation, so this massive consolidation over here, you can see price has been tracking this move on the 30 minutes time frame using the moving averages. So 200 EMA, 200 SMA, they work wonders when tracking trend. And if you just went long on each bounce, you would have been in the money. So that's what I did. Bounce, 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 bounce. I failed to catch this bounce here, but I went on breakout of the structure, and you can just see, right? So for me, I'll be watching out for a pullback, maybe closer into these moving averages, then look for a bounce to go higher, right? By that time, moving averages might have crept higher like this. As usual, they're not static, right? So if this happens, then this may present us with a very good opportunity to go long for that final push to the upside, right? So this is what I'll be watching up on silver. For now, it's a no-brainer. You just can't go long at the current price levels because the volatility is just extremely high right now. So for silver, waiting for a pullback into this area of value, which would be this moving averages on the 2 hour on the 200 EMA, 200 SMA on the 30 minutes time frame, and you look for opportunities to go long. So this gives you a very good risk to reward ratio, right? So if you catch this move after a confirmation of the bounce, stop loss will probably be around 100 pips, 50 pips, depending on where you take your position. Take profit is going to be first one around 600 pips, right? So risk to ratio of 1 to 6 already if we get a bounce on this moving averages on the 30 minutes time frame. And if we go higher, you could be looking at a risk to ratio of 1 to 10. So this is the kind of trades I love, and it's all about being patient and, you know, watching price come into this moving average, or at least close to the moving averages. So another reason why I believe we may be getting close to a reversal is because price is currently taking towards the overbought level, but I think there's a good chance we still climb a little higher, you know, to, you know, extremely shoot out of the overbought level before we see that dump to the downside, where we look for opportunities to go long. So this is the only case scenario where I see us going long right now on silver. If you want to go more degen, you want to be more aggressive, you could go to the 15 minutes time frame, right? So if you take a look, 15 minutes time frame, we've had one bounce here, so there's a good chance we come down, right, into the moving averages and bounce off again for a quick move to the upside. So something like this is totally possible. That's happened on gold before, I think a few months ago, and it is likely going to happen on silver. So 15 minutes time frame, because of the extreme volatility, we may get a move into the moving average on the 15 minutes time frame, low risk, and we get a move to the upside. So this, if you want to go even more aggressive, right? But for me, I'll be patient to wait for the 30 minutes time frame to see how price reacts with the moving average. So mind you, the confirmation could be a bullish engulfing candle, it could be a it could be a doji, a spiny top, a hanging man, as long as you get those candlestick confirmation, or it could be a shift in structure, higher lows, right, higher highs formation after the bounce. So that will give you a signal that we're going higher, and you go long and you just ride the move as you go higher. That's a brief for silver. Lastly, we're talking about CHF-JPY. So very interesting chart, this one. Structure looks extremely bullish. You can see over here, big consolidation, massive move to the upside, higher highs, higher lows. So swing high, higher high, higher high, higher high, higher lows, and we had a very good bounce off of these price levels. And right now we're consolidating. So this is a range, a bullish flag, right? So it's a range, a bullish rectangle, excuse me. And if you go to the 4 hours time frame, something very interesting. If you overlay the moving averages, I love my moving averages, you can see that we've been bouncing off of this moving averages for quite some time. So over here, sweet bounce. Over here, sweet bounce. I feel so bad because I missed this one, right? And I was looking at this trade when this thing bounced, but I was just not interested in trading currency pair at that time, right? So good bounce, and I think if we get a move to the upside, so we're either going to get a bullish breakout from this structure to the upside, or we're going to get a bearish breakout coming to retest this moving average again, right? But in my opinion, for now, moving average is irrelevant because we are going to be focusing on what's happening over here, right? So going back to the 1 hour time frame, there's only one thing, only one reason to go long, and that would be watching out for a price breakout from this area of resistance, right? So we could get a pullback to the downside because this is a clear solid range, a move to the upside, a consolidation, and then a bust, bullish breakout to the upside, right? So if this happens, then you want to go long after the breakout. Entry could be immediately after the breakout, stop loss underneath the consolidation list of the breakout, and you trade your positions to go higher because it's probably going straight up, right? So price discovery on CHF-JPY as well, I think, and this will just be the best possible way to enter this trade, right? So you could also try to jump in here after a bounce followed by confirmation, and you just ride the positions as you go higher. That's it briefly for CHF-JPY. This dotted line is my alert, so when we break, I think this is going to be my last trade on currency pairs this year before we move into 2026, where we come up with another game-changing plan and see how we could, make massive progress next year with our trade results. So that's it brief for this week's analysis. If you love the content, please like, subscribe, leave your thoughts in the comment section down below. And if you're interested in learning to trade structures, chart patterns, get the chart pattern playbook. It's going to help you a lot. That's it from me, guys, this week. See you next week.